And over the weekend, China set an official economic target of around 5% for this year. Along with the modest goal, it stuck to a 3% inflation target and set a 5.5% unemployment rate for the people in cities. Other announcements at the NPC include the creation of a new national financial regulatory body. The new regulator will absorb China's banking and insurance watchdog and oversee all financial sectors except the securities industry. For more on what's coming out of the NPC, we're joined by Mr. William Lee, Chief Economist at the Milken Institute. Always good to see you, William. Let's start with this new thing, because a lot of the banks and financial markets are going to ask the questions, what does it mean to me? So why the banks and not the securities industry, and what's this new regulatory body?
Well, I think China's acknowledging that the insurance and banking industry can be consolidated together because those are institutional lenders. But the market and capital markets are really elevated now to a higher position, having a role in the State Council, because China recognizes that its future is going to be in managing the flows of capital across countries and within China itself. And capital markets are going to become much more important in financing China's development, China's future.
Well, let's be honest, the capital markets are strained, partly because of the restrictions and COVID over the past couple of years. And the Chinese, they want to sort of restart and reinvigorate that marketplace. How's that coming along?
Well, I think the attempts to try to invigorate the economy are going to be domestic focused. And I think it gives the capital markets a chance to try to finance and develop instruments that people can start to use instead of houses for their investment. I think one way of diversifying the typical Chinese household's portfolio is to give them securities and investment opportunities beyond real estate. And that will be an opportunity to be a big boost to China's consumption.
Right.
Which
Okay.
is exactly what the authorities want.
Assuming you're correct, if that's the shift, real estate is almost a lifelong endeavor for people in China. I mean, it's been the staple. To change that mentality is going to take a heck of a lot more than 1 year. I mean, you're talking about a generational change in how they think, or people think, about investments, especially when it comes to long-term investing.
Well, Phil, I think you underestimate the flexibility of the Chinese households. When people are given good investment opportunities and a way of securing their wealth and diversifying away from a very volatile asset class right now, I think they're going to jump at the opportunity. But you're right, it's going to take a while to shift the mentality entirely. But I think as the success of the domestic capital markets becomes greater and greater, and more opportunities to invest in solid companies becomes more obvious, people will do that. But the key to doing that, though, is to have transparency into the accounting system. So that means China's also going to have to revise its accounting systems to be up to stuff with international standards.
I've been trying to convince my parents for 40 years with no luck, William, so you're welcome to give them a call. Let's talk about President Xi's about 5% target that they have. A lot of people said it could have been a lot hotter. I suppose it could have been cooler. It's not too far off from what we saw last year. But this is a tough target because you don't really know what's going to happen this year. There's a lot of factors that's happening out there.
Phil, that 5% number has gotten a lot of discussion among China observers and some friends of mine who are chief economists for China. One half of the argument is, well, the rebound in China is going to be just about as strong as it is in other parts of the world, and we're going to expect the first couple of quarters to have a very strong economy. But now going forward into the second half of the year, will that strong rebound be sustained? And that's where some uncertainties abound, because what we just talked about, the households have been devastated in terms of their household wealth, and uncertainty about their real estate holdings is really going to hold back people from really going overboard in consuming. Even though China policy has been to give a lot of consumption subsidies to people to try to spur consumption, I think a lot of that incentive is going to be saved, and people are going to be more reluctant to spend. And going forward, I think the second half of the year, the question is, will it be strong, or will they start to taper off as some of the headwinds that China is facing, like the demographic problems and difficulties with efficiency in state-owned enterprises, may start to haunt them, and that may hold back growth in the second half of the year into next year.
I mean, not to mention the geopolitical concerns. I mean, they've got the issue with Russia, Ukraine, which continues to be an international focus. And also, you may have heard earlier about the comments regarding the United States being a very fierce competitor, and you hear that sort of strong talk from both sides. And I know the business community is trying to sort of block that out and kind of move on with business as usual. But But this talk, I mean, just in your experience and my experience, I know you would agree, this is reaching a stage where I feel like something's got to happen.
Everyone is extremely nervous, especially on this side of the pond, about what is going to happen with China investments going forward. Will companies continue to put money into China, or will they start to diversify their supply chains? Well, I can tell you the answer is going to be both. They will definitely be diversifying their supply chains, going to India and ASEAN. But the question is, how much will they divert? How much will China be able to retain the capital flows? And as the belligerence and wolf warrior talk starts to increase, I think more and more of the diversion is going to be taking place unless people are confident that foreign capital is welcomed in China. And Xi Jinping, some of his speeches before have tried to emphasize the welcoming of foreign capital, but right now, naming the United States as one of the sources of domestic insecurity is not going to help things.